Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that you can indeed hear and see me. Hope everybody's having a fantastic morning. Just want to welcome everybody here. Also want to give a shout out to those new in the program or those watching this in the recording. Want to say hello to you guys. I'm looking forward to hosting our live trading this morning. We've got a lot of good stuff. It's always fun to talk when we're winning, right? Weekly trades, last I checked this last night was a really good night for the weekly trades. And our Euro Kiwi swing trade hit its take profit. The trade we took Thursday, it's now Tuesday. It made over 200 pips. We're going to recap that trade. That's really fun to have a trade go from entry all the way to target, which is really cool. And then obviously we'll analyze the COT scanner and Steve's scanner to see if we can get into another price action trade this morning. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So like I said, weekly trades are looking pretty good. These are the overall signals for the week. Even oil's looking really good. I don't know if you guys trade oil, but that has been we've actually been pretty spot on with oil for the last several weeks. So that's been pretty good and it continues to be good. But as far as the currency pairs go, the 7 trades we took, all of them are positive except the pound Aussie. So we got 6 out of 7 that are going in the right direction. Yeah, last I checked, I was up over 218 pips on across that's net after losses, 218 pips across all of these. Some of you might be up more than that, and some of you might be down a little less than that, but hopefully everybody's positive this morning. Yeah, pound CAD, Mohammed. Yeah, that's been a really good one. That buy this week, it's been really good, and um, yeah, it's pretty cool to see how, just one solid winning week can do all sorts of wonders. It is just Tuesday, so there is still more time to go with these trades. They could potentially make even more. They could pull back. That's a discussion for later. But so far so good. So anyway, the next big highlight is that our Euro Kiwi trade hit its take profit. So let's go over to that real quick. Um, yeah, we hit our take profit just perfectly. This is about as good of an entry and an exit as it comes. We pretty much called this out perfect. This is the trade we took on Thursday. We put an entry to buy right there, put a buy limit right there, and then this market starting Friday and into Monday, and then obviously yesterday. Now we are Tuesday. This market just shot up to the upside, went straight to our target, went a few pips above our target, and now is pulling back. So it's really, really good analysis we did on this trade. Um, and we were pretty smart actually for going above this old resistance. A lot of people I think would have put their take profit right at that or just below it. We weren't fooled. We actually took we actually found this is I'll just recap this. One of the reasons why we took a take profit where we did and not at the resistance level was because we identified that this was a major change of character, and as well, obviously a change of character is a break of structure right here. And so this happened a while ago. This was back in November, but this is how we knew where to take profits on this trade. And we kind of found that this general area was kind of where liquidity, um, yeah, this is kind of where liquidity was and is, right? And so, if I send this over to the right, we saw that to be a better area to take profits. Um, One specifically a little bit higher. I think that's where let's see, where did we get out? Okay, we got out just above that actually. So I think we were focused on this specific area right there. Um, Yep, that's where we took our profits. Why did we take our profits there? So, so the way I look at it, guys, is I say, okay, with these price action trades, I go back in time and I look at what's the biggest impulse, like what broke the biggest structure. Well, this was a major support level, and so too was kind of this area right here. Even just that whole this whole thing is support right through here. And what was the catalyst that kind of sent it lower? Um, what caused this right here and subsequently all of this? Well, the market kind of slipped, it was slipping away all throughout back here. It was definitely slipping away. But whatever happened here is really what caused the floor to break through on, we broke into the basement right here essentially. That's that's liquidity. Okay, that's one prime example of liquidity. And how you find liquidity is you just want to follow the biggest impulses back, specifically the ones that break structure like this did. And that's how you can kind of really pinpoint really good targets and things like that, like we did with this trade. Um, so we're out of this one completely. And this is pretty fun because this trade did make from our entry down here to our exit. That was like 215 pips on just one trade from Thursday to Tuesday, which is really, really cool. Anyway, so that trade's done. Let's go ahead and delete all of our stuff here. Um, and like I said, let's go try to find another one. But in other news, we did have that Aussie rate statement last night. I did get triggered in this morning just recently to this Aussie yen trade. This is this has just barely happened actually. This is a huge swing trade as well, just like the Euro Kiwi. This has the potential to make a lot of pips. Um, um, this trade is specifically like going for, well, it's about the same. It's 192, 193 pip opportunity. We're risking about 50 pips. So it's like almost a 1 to 4 RR ratio, which is pretty good. Um, So why did we take this trade? Let's kind of go through the motions on this one just real quickly because this is now a trade that has now, obviously triggered. We had a huge impulse last night that sent this up. I had a feeling that this was going to come. That's why I didn't want to sell right away necessarily on the Aussie yen. I thought we could get a better price, like we're at right now. I'm not a big fan with how aggressive that impulse was. It kind of makes you think like, is that gonna are we going to keep going up? It makes you pause and wonder, right? So let's talk about the details why we took this trade and let's kind of go through that motion. So the big thing actually came from the COT scanner on the Aussie yen. So when we look at if we just look at the Aussie yen specifically, what we're finding right now is an increase in short positions. Okay. So the last 2 weeks, there's been a steady increase in shorts. 2 weeks ago, it was about 10% increase in shorts. And then this week, about an 11% increase in shorts. And so in the last 2 weeks total, we've seen an increase in 21% total over the last 2 weeks in the short positions. Um, it looks like they were a little bit more long or less negative 3 weeks ago. Um, Same thing 4 weeks ago and 5 weeks ago. So this is really a recent thing with the Aussie yen, the shorting that's going on right now um, by the banks. And so let's see where they entered their positions. So now that we know kind of where they started entering shorts, let's kind of line that up with the charts. So here's the Aussie yen on a 1 hour time frame, and you can see um, these yellow bars. These yellow bars represent the weekends. So anything between a yellow bar and another yellow bar is a week of trading. And so this is last week right here. This is the week before. The COT data specifically comes out to the CFTC on Tuesdays. So this is the end of the last COT reading. This would have been a week of COT data right there. And then another week would put us like right here. Okay, so this is where the banks have shorted essentially over the last 2 weeks. This is where they entered either as high as up here or as low as down here. So somewhere in here, I don't know where their mid price is. It doesn't really tell us on the cotton data, but somewhere in here is where the banks throughout this area is where they entered a bunch of shorts, right? So we have data on that. And now the market this week has actually gone up. So it's actually gone counter to what the banks are doing. And I like to find these types of trades because if you can find the market doing the opposite of what the banks are doing, um, then that means the banks are losing money. And I like it when I see the banks losing money because they don't like to lose money and they're pretty good at making money. So a lot of the times they'll actually try to find a way to recover their losing trade. So that's why I thought this might be a good area. So speaking of liquidity analysis, um, yeah, they'll always find a way, LOL. Yes, exactly. Um, so so basically, this is kind of my thought process right now on the Aussie yen. So if we know that in between here, I'll just delete this one. In between these two blue lines, in fact, now we don't even need that weekly indicator. In between these two blue lines, we know that the bank shorted a bunch. Um, I don't know if they've been buying since then, since last Tuesday, I guess in the last week. Kind of looks like they have, but we don't have data on that yet. We only have data on the two blue lines. Um, but when I see this, it kind of makes me think they're losing money on what they on their shorts that they added. Because not only did they add shorts the first week, but they added shorts the second week, and they've got to be losing money on those shorts from, and they actually added even more shorts last week. And that's why I say they got to be losing money on those trades. I just don't see how they're making money on that right now, the banks. So, so speaking of liquidity, this is a huge impulse move, right? Big impulse. Okay, so if you follow the impulse backwards, you can find liquidity, right? Because this market was already starting to kind of drift away a little bit. And then it was kind of like right in this area. Whatever took place in here is what really led to this market getting crushed. Okay, so somebody put in a lot of orders right up in this area to create this, and that's what makes this a supply zone. Um, and so that's kind of why we thought this might not be a bad area for an entry. And so far, we're basically right at where we entered. This just barely entered recently. So the market is finally just seeing a little bit of a pause going on right here after this move to the upside. Um, and so, you know, I'm this is kind of the I guess the interesting part because we're going to find out pretty soon here if this wants to just continue higher or if this wants to have an utter pullback. Um, I'm not exactly sure I don't know exactly how this is going to play out. Um, when I look at let's actually pull up Sonar Lab and some of these others. Sonar Lab does have a block right here where we're selling on the hourly. Let's turn on the detector. The detector also has an order block right there. That could be another reason why we're slowing down right now, which is to be expected. Let's turn on the 2 hour. And let's see if there's any other blocks we can identify. Yep, there's one right there on Sonar Lab. Let's turn on the detector. Yeah, there's a couple of up there. So, I think that's probably my biggest concern with this trade. Not that it won't work out. I believe this is a good trade because the banks are in need to get this to go lower. My biggest concern with the Aussie yen is not that it won't go lower. I'm worried that it might just go up to these two blocks and then come down. But that's going to get pretty close to our stop loss. And so that's my biggest, like I said, that's my biggest concern with this trade, is that it is going to try to get to those two blocks, um, and then come down. So let me just let me look at an even higher time frame real quick. I just want to see. Um, if there's any other blocks that I'm not aware of. Okay, so here's a 3-hour. And on the 3-hour, you can see Sonar Lab has 2 blocks right here. Smart Money, or not Smart Money, but the detector has 2 blocks up here as well. There's an overlap of Sonar Lab and the detector right here. That might be a better place to enter, to be honest. And then you on the 4-hour, you've got an overlap kind of up in this area. That kind of seems like, to be honest, that does seem like a better entry. I hate to do it, but I just don't want to draw down. In fact, this will help me improve my RR ratio quite a bit if I entered there instead. Let's see, has the market been up here? No, this is pretty much the top. The market hasn't been here in a long time. Okay. So this is what I have to work with. Okay, so okay, that's good info, actually. That's really good info. Let me zoom back in on the 1-hour chart. Oops, let me put that back. Yeah, let's delete this. And actually, let me go back to the 3. Okay, so that's where I get an overlap is right here. Okay, so let me go back to the 1-hour. So I'm kind of thinking that this is probably not the best area to sell. I kind of think that this is it right here. I think this is too early, to be honest. So I just want to get us a better RR ratio. So what I'm going to do is I'm going to close the trade and I'm going to enter here instead. And that actually gives me a 1 to 5 now, a little bit better than 1 to 5. And it also helps me avoid the drawdowns of this area, which I think is going to happen. So that's what I'm going to do. I'm going to just close and re-enter this trade. Okay, so let me make an update to that. We're still going to try to take another trade together, but I just want to make an update here.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay, so I'm going to enter at 98.649 instead. You may need to change your lot size, like you might still need to go through a lot size calculator and figure all that stuff out. Um, and then is that still a good take profit area? Yeah, that's a good area to take profits. That's still good. Okay. 96.474, and we'll stop out at 99.073. Okay. So like I said, I still like the trade. I like this one a lot. I just want an updated entry because I do think with how robust this move was this morning, I'm not feeling it really with this entry here. I do think this market's going to try to get some of these more upper levels of liquidity. And so I want to be patient for that. That's going to drastically improve our RR ratio. Like I said earlier, we know the banks are trapped because from the COT scanner, we can see that over the last 2 weeks, from this blue line to this blue line, that the bank shorted substantially, especially in the last week, which is between about like right here and here. So they have a lot of shorts in this area that are losing money. They're actually drowning in those trades right now. And like I said, the banks, and as Muhammad mentioned earlier, they will find a way. So I do think the banks are going to try to make money on this trade. Um, they're not going to take a loss on this, especially because we know they entered shorts right down in here. So the fact that the market's up here tells me that either this zone, more likely this zone up here, is going to be successful, and we should be able to, make some pretty good money on this trade. And then lastly, you can see when we go out to the higher time frame, we just like the fact that there's more overlapping order blocks up here. I have at least two that overlap right at our entry, the updated entry, and I like that a lot better than this specific spot right here. I think the market is going to try this afternoon and maybe this evening to try to get to that, and then come down. So just be patient for that. I think it's worth making the update. I really do. And I could be wrong. Maybe this market does just come down. Maybe it comes down without going to our updated entry. And that stinks when that happens. But again, one of the things that you guys will discover as you continue to trade, if you're new to trading, is the better you can make your RR ratio, the more lucrative the trade will be. Just the difference of moving your entry, just even a matter of pips, drastically changes your RR ratio, because the bigger the stop loss you need to adequately take the trade, the smaller the lot size. The smaller the and then the opposite's true. If you can get a smaller stop loss, if you can really refine and define your entry and your stop loss, the bigger the lot size, so that if you win that trade, it's all that more profitable, right? So that's what I'm focused on right now. That's my big focus, and especially with these price action trades. So give this one some time. I do think it is going to tap up into this liquidity zone. I think the banks are going to do all they can to send it lower once it gets there, and then we'll be off to the races. Okay, any other trades? We do have that pound franc that's still pending. Again, a lot of these are just going to be pending for a while. This one hasn't quite gotten up to our supply zone yet. Just a little recap on this one before we move on to taking new trades. Um, um, if we let's actually, this isn't quite what I was looking at. Let's go back. Okay, that's a 4 hour. That's not quite what I was looking at. I guess that's the 1 hour right there. Maybe I'll turn these off and I'll just show you manually, because those are kind of giving me blocks everywhere. So when you go back on the pound franc, you got to go back to here. Okay, oh yeah, this is exactly what we're talking about. This is pretty much the same thing that we did with the Euro Kiwi, but instead of taking profits, this is our entry. Okay, so the pound franc is obviously going up right now. We're going to talk about the fundamental reasons for selling in a second, but first of all, and we're not selling yet, by the way. This is just us preparing for the market to come up to liquidity. Um, so basically what we have here with the pound franc is this is a break of structure, a major break of structure. You can kind of see the market was melting away right here and also right here. But where was the last point where this thing just kind of really took off? So whatever happened in here, whatever took place in this general area right here is exactly what created this fall through the support. Just an absolute obliteration of that support level is whatever took place in here. So that would be liquidity. So we know that that's a liquidity zone. And then the market also took off down here too, which that was old liquidity. But I think the true liquidity zone is up here because this is where the real move actually began, and we are really close to this. We're not too far away. Um, and I believe that to be the zone. Let's turn on some of these indicators. So here's this is on a 1 hour chart, and this is just the detector. The detector does have a block right there, and that's on a 1 hour. But let's pull up a two. The 2 hour actually doesn't have blocks right here. They're saying that these are more blocks. That's fine. I'm not. I it's gonna paint a lot of blocks, and they're saying that there's blocks right here. I really do think there's more in the tank. I think the pound franc is going to try to go up a little bit more. I'm not quite ready to say that, um, I'm not quite ready to just say that right here is where it's going to stop and turn. I think it's going to go up a little bit more first, up into that supply zone, and then that's where I really want to sell. Um, is up there. So, and we'll see, maybe this just turns around right now. Maybe this does just utterly collapse right here. I do think it's going to try to go up to there and then collapse. That's kind of how I see it. But why are we expecting a collapse, guys? Why is this pair due for a collapse? A multi-hundred pip move to the downside. Why is that supposedly going to come? So it all comes down to the crowded market, right? So if you pull up, let's just look at the pound franc. So you can see right here, it's 5 out of 5 stars. Okay. What does that mean? It just means that the banks have a really big position. And if you look at the long-term column, it says strong sell. So if it says strong sell, that actually tells you that the banks have a really big buy position because now we're anticipating a move to the downside soon. It doesn't mean it's going to happen today or tomorrow or even this week, but a big move to the downside is probably coming. The what I tell people, and this is kind of what I anticipate, is like 1 to 3 weeks. Could happen this week, could happen next week, could happen in 3 weeks. But until it happens, often the market will go against this signal. But when this thing is right, once we finally get that move that we've been waiting for, watch out because this thing's just coming down like an endless purging of long positions will just come when this thing is ready to just fall apart. So that's what I've been waiting for pretty much this last weekend. This week is I'm getting prepared and trying to find locations where I believe the pound franc will have that collapse. And it'll be epic. It'll look similar to, I'll show you what it'll look similar to. It'll look like kind of like this, probably look more like this. Um, Trying to find another really good example. Honestly, it could look something like this even. Um, so those could be these are the types of moves that will be coming out of this when this is done. So let's drag these over. Um, and now you can kind of see what my anticipation is on this pound franc. So when this juggernaut rally to the upside is done, this is what's coming behind it. Is a pretty quick and rapid move like this. Okay. And how many pips is that? That's like from there to here, that's 175 pips. That's 212, and then this one's about almost 300. So give it like maybe 200 to 300 pips, we'll say, is what we would expect to come behind this when this is done. This could go up. Like I said, maybe it comes down now. I mean, there actually does look like there's some blocks forming right here, some sell blocks. But this could go up another 50 pips is kind of what I'm thinking before it drops 200. See, and that's the way I look at the crowded market indicators. I'm thinking, okay, that's how I look at this because I think some people think that that means that this move is going to happen today or tomorrow. That's not how you should look at the crowded market indicator. That's not how I look at it. I don't think that's how the banks look at it. I think this is more just preparation for what is coming on the other side. Um, and if you're willing to be patient for 1 to 3 weeks to get that 200 to 300 pip move, I think you'll be very pleasantly surprised and happy with the trade. But the cost to do that is you could have a drawdown if you entered too early that could be substantial. Like you could be down 50 pips, 70, 80 pips on a single trade um, before it curves in your favor. Okay, so just be ready and aware of that. Um, that is a reality that we have to face with this style of trading. So you don't have to take these types of trades if you don't want to, but I offer it because it is a great way to trade, and I like to trade this way. I For me, my favorite type of hunting in the market is catching the 300 pip move, the 200 pip move. And I feel like the crowded market indicator is perhaps the best indicator I've seen on the internet that can predict those types of moves. But the baggage that comes with it, and I'm trying to optimize it, give me time, but is the fact that I don't know if it'll happen this week, next week, or the week after. It does take some time. So all right, guys. Anyway, so this trade, give it time. This probably won't trigger right away. Give it another couple of days and it might trigger. Maybe it won't. We'll see, but you just got to take your shot anyway. Even if it won't trigger, you still got to take your shot. Okay, so we got this one. I think that's pretty much did I get every trade? I think so. So now I just want to shift my focus and find another opportunity in the market, and we'll get out of here. By the way, just while I've got everybody here, I want to remind everyone. So tomorrow I won't be able to host the COT report and the sentiment webinar in the evening, so I've moved it up a day, so it'll be tonight. So if you want to come to the sentiment slash overnight trading webinar, that'll be tonight at 8 p.m. Eastern. And then following that webinar at 9 p.m. Eastern, we have the COT report. And as always, they will be recorded if you can't make it. So, all right. Okay, so what I want to do now is the way I've been finding a lot of these trades, like the Euro Kiwi trade we took on Thursday that made us 200 pips this morning. Um, I found it through the COT scanner. This is where I kind of did the initial analysis and and then what we did from there is we compared the chart to the COT scanner, right? So what are we looking for specifically when we look at this COT scanner? What's the goal? Well, what I've been doing, or what we've been doing together, is we've been trying to find currency pairs that are that have been trending a specific direction over the last 2 to 3 weeks, okay, substantially. And then what we want to find is the banks. We want to find the banks kind of struggling to get the market up. Basically, we want to find them going a specific direction, but the price hasn't responded to their movements yet. That means there's opportunity for you and me to trade with them um, potentially, and we can place a price action trade based off of what we find. Okay, so let's kind of go through. I'm going to go look at let's look at the positive ones first. So last several weeks, obviously silver's been pushing pretty hard. Silver's actually been pushing harder than gold. I think this is expected. Gold has a little bit more of an or silver has more of an opportunity to go up in the most immediate term than gold does, just because gold has been the leader in the last couple of weeks, and silver is now responding to what gold has done. So I kind of lean that your arbitrage almost could be like you could almost like buy silver and sell gold right now would actually be a good arbitrage trade. But we don't do a lot of arbitrage trading, but that could actually be a not a bad trade to take. Um, okay, but I'm not going to take a trade on silver if unless you want to, but silver's been added to significantly. The only issue I have with gold and silver is that I think they're crowded market signals. So a move to the downside is coming on gold and silver. I think actually they're even down a little bit this week. Um, but they are due for a substantial move lower at some point. But I don't want to, I hate to do that on gold and silver. I'd rather do it on a currency pair. All right, so let's move on. Pound CAD, this has been moving positive last couple of weeks, pretty big time. This is one of the buys on our weekly trades, I believe. And if you look at the pound CAD, it is up a lot, right? Um, I believe it's up a lot. Let's take a look at this. Um, it's actually up okay. It's just decent. Well, yeah, because they the last 2 weeks they've been buying. So they caught data technically comes out on Tuesdays. So basically from here to here is where they bought. And yeah, they're making money on those trades. So what I like to do is I like to find it when they're not making money. And they currently are making money on this trade. It's the Aussie yen they're losing money on right now, which is why I like the Aussie yen short. The incoming Aussie yen short trade should be good by the end of the week, um, because the banks are currently losing money on that trade. Anyway, they're making money here, so if I see them making money, I don't like to work with it as much. Okay, pound kiwi, this has been positive last couple of weeks. I do believe the pound kiwi has been going up. It has obviously, so the opportunity to follow the banks has come. And I think this is one of our trades. Yeah, this is one of our trades that we took this week. So we're actually following this already, which is good. Now let's continue what I was saying. So now let's go here. Euro Kiwi again, they've also been buying the last couple of weeks. Um, and I think that's also Euro Cat, I meant, sorry. Oh, and yeah, they're slightly positive on this. Like they started buying right here, and this is where the market is now. So yes, they are making money. Um, Euro Kiwi, they've also been buying last couple of weeks. You can see that right there. And that has also been going up, right? We took advantage of that trade. That was kind of nice actually. Um, yeah, we made money on that one. And actually, that one's pretty cool because with the Euro Kiwi, you can see they've transitioned away from, they went from shorts over here from 10 weeks ago and 5 weeks ago, and now they've transitioned to long positions, right? So you could definitely see that transition happening. And so we called that one really, really well. Um, the USD CAD's a little bit the same. You can see it went from slightly positive to more positive over the last 5 weeks. Yeah, over the last 3 weeks, you can see the positive shifts on the USD CAD, especially over the last 2 weeks. The banks have been buying pretty substantially last 2 weeks on the USD CAD. And then if you go look at it, you can see, I think this is another one of our buys that we're doing pretty well on. This was really good. We talked about this one earlier this week and last week because um, they pretty much got all their buys in between here. This is where the banks bought between here and here. And some of those buys are not priced very well up here, right? So they must have been losing on these trades. And sure enough, they didn't want to lose, so they sent it right back up, right? So that's what I like to find is I like to find these little nuggets where they're losing money and they're losing money, approximately where they bought. And so now okay, they have a job to do. So this one we also took advantage of. Isn't this one of our strong buys this week or was it just last week? Because I know no, it is. We're taking full advantage of this right now. That's good. That is one of our overall strong buys right now. And yeah, you can see like a couple of things. So you can see the 5 week shift is positive. And then the reversal detector, which basically looks at the 5 week minus the 10 week. And that is also positive. That's indicating a buy right now. And then you got retail traders who are trapped in long positions or shorts, and so that's going to be a buy. So pretty much a buy across the board, except for the long term. There's no long term bias, and that's why you're getting an overall strong buy on the USD CAD. Okay, anyway, let's move on. So that's good. Pound franc, this one, now here's the thing. This, you guys can see this. Over the last 5 weeks, this is consistent buying pressure on the pound franc. Every week, it's a little bit more positive. 1 week, it's 7.64. Last 2 weeks, it's 28. 3 weeks, it's plus 33. 4 weeks, plus 40, and 5 weeks, plus 50. So pretty much every week, they've been adding longs on the pound franc. And that makes sense because when you go look at the pound franc, it has been going up over the last 5 weeks, 1, 2, 3, 4, 5. Pretty consistent buying pressure going on right there. What's the big concern with this? Again, you got to be careful with these because if you buy, even though this is happening, and normally we'd like to buy this, you got to be careful because if you just jump into those buys when the market's crowded, so you got to check to see if it's crowded. If it is, then I kind of lay off of those. I try not to follow what they're doing anymore when they get crowded. So that's why I've been not doing so much with this pair as far as following the banks and buying with this one. Okay, so like I said, I hope that makes sense. But there's plenty of others that you can follow. We're going to find a few gems here in just a moment. Just give it some time. I just got to go through the list. And hopefully you guys can do this on your own time as well. To use, by the way, the COT scanner, for those of you that don't know, you can use this COT scanner. It's under members right here where it says COT scanner. You can come and use this anytime. And it just updates on the weekend. During the week, it's fixed. It doesn't change. Um, some of this info is also found on Steve's scanner, but this is more of a comprehensive look at the large speculators, so the big banks, um, on a week-to-week basis, which is pretty cool. All right, moving on. So Aussie CAD, this has also been pushing bullish. You can see the last 3 weeks, this has been pushing up. This is really interesting to me because if you look at the Aussie CAD, this actually went down um, over the last week, and even this week it's slightly down. But look what happened this morning. Very interesting thing happened. This thing went all the way down to this demand zone right here, and they bought it all back up. It just took a couple of hours, and they were like, "Nope, going back up." So I just think that's interesting that the banks protected their position because we know that they're buying this right now, and they just they swooped in here and took it back up. Now, this could actually, to be honest, I actually see this one turning into this could be an opportunity for us because let's actually debate this for a second. Let's pull up the Aussie CAD on Steve's scanner and let's get some more info about like how everything else is. Okay, so it's an overall just buy signal. The 5 week shift is slightly positive. This is where it gets really good. So we'll have to dive into the COT scanner a little bit. So the difference between the 5 week shift and the 10 week shift is pretty substantial. That's why this is a strong buy right here. So what this is saying is that over the last 5 weeks, there's been a monumental shift in bank positions to buy the Aussie CAD versus the previous 5 weeks. Okay. I guess one downside here is that the banks overall have a general sell bias. on a long-term basis. Um, it is something to look at, but it is not something that, and I can also see that their volume on this is not huge because it's only 2 out of 5 stars. So I'm not too worried about that, at least as a short-term price action trade. I'm not too worried about the long-term signal. Sentiment, the retail traders just don't have a bias right now. As you can see, it's neutral, so that doesn't help or go against us. Let's go and look at, now let's dive into the COT scanner specifically on this. So here's where I want to show you guys this. Look at this. So the 5 week here, let's actually just look at, actually, I don't want to mess up what I've done here. So let's just look at it like this. Where did it go? There it is. Okay, it's right here. So when you look at the 10 week, over the last 10 weeks, there's been a negative 18% shift. Okay. But over the last 5 weeks, there's been a positive 11% shift. So that's where that one indicator on Steve's scanner comes alive, is because when you subtract the 5 week from the 10 week, there's a big difference between those two numbers. So what that tells us, and it's a positive number. What we've got here is what we've got here is a shift going on over the last 5 weeks. So the Aussie CAD has gone from a negative number over 10 weeks to now positivity, right? Like we're moving into longs. And we can now see that in the breakdown of the last 1 to 4 weeks here, right? You can see that in the breakdown here. When did they really start to add long positions? It kind of looks like they started 3 weeks ago, and actually especially 2 weeks ago they really added, and then it's been pretty consistent. Even last week they added 7% to this. So let's kind of look at the Aussie CAD over the last 2 to 3 weeks, and let's see where the banks added their long positions. Now that we kind of a fundamental story written in our head here, let's go look at this. So where did they add long positions? Well, right here is where the last COT data came out, was here. And then this goes all the way to about, well, 3 weeks ago. So this would be 1, 2, 3, would put us approximately right here. So this is where they really added long positions. Oh my gosh, that's so smart of them. They're so smart, these guys. So they added positions as low as down here, and those were good trades for them. And they added long positions up here as well. So my guess is that their average price is somewhere in this area right here. It's almost exactly where the market is right now. Look how this market came down into this demand area and immediately popped up. I think it's because it pretty much came down to where the banks pretty much had their buys. They had their buys, a lot of buys at least down in here. And as soon as it came into there, they just went this morning. That just happened this morning. Um, so that was quick. That was like 2 or 3 candles. It was just boom, right back up. So I have a feeling that if this pulled back again, the banks would probably try to send this higher. I think this could actually be a pretty good trade for us to take. Um, it might be worthwhile. Um, Let me pull up the order block indicators, and see if we can find some demand zones that make sense for us. Okay, on the 1 hour chart, I only have Sonar Lab order blocks in this area right here. There's a bunch of selling blocks up here. That's why I'm not buying up here. Plus, I'd like to buy where they were buying, which looks like most of it was down in this area right here. And man, looks like there's some buying down here too, but I'd hate to wait all the way down to there. Let's see if there's any other order blocks on these different time frames. This is a 15-minute chart. There are some blocks just below this area right here that might be worth looking at on a 15-minute. Let me try 30. Yeah, there's a block right there. Let me try an even higher time frame. Okay, the 2 hour does have quite a bit of blocks here. You've got a couple of blocks in here. There's this one, obviously, that we already tapped into this morning. Um, Yeah, there's actually a couple of places where this might be worthwhile. Okay, here's the 3 hour. The 3 hours really lighten up like this area right here. So just below the support that the market made this morning, it actually looks like there's some good buying areas right in here that could be pretty good. And that would be right where the banks bought, I believe. I think that's exactly where they got in. So I think I might be interested in a buy right there on this. Like I said, when you look at the COT scanner, you can see, like I said, you can definitely see that they've been buying. And they've not only been buying, but even over the last 5 and 10 weeks, they've been transitioning. They went from negative now to positive. And not only have they been going positive, but over the last 2 to 3 weeks, they've been doubling down pretty hard on long positions. This is pretty aggressive buying going on. So since we know this, I kind of view this area as a nice little bed or a launch pad for the market. So I'm just trying to identify where in here is the best place to buy. And I do think this is probably it right here because we know this is where they we know this is where they pretty much were buying. So I think that this is a good area. Let me turn these off. There definitely could be some spots below this. In fact, if we want to really hone in on an entry, I think I really want to I want to get better and better at my entries because the better the entry you can get, the better the RR ratio. Okay, I'm gonna go with that. Now do I want to capture I'm gonna take some of this down here. Um, okay. Yeah, I'm back here. This was a break in structure. You actually had a couple of structure breaks right here. Right through here, there was a couple of structure breaks. And so all of this liquidity, whatever happened in here, sent the market up. And then also whatever happened in here in this little area right through here is what made this market go up so much. And we also know that's where the banks bought originally from the COT data. So um, I think this is the spot, guys. I think that's where we want to buy is um, just below where this low was. So if this comes down one last time, this is a tremendous place to buy right here is fantastic. And then if we can let this go up back up into these, like if we can go back up into here, that would be great. Um, Up into this area, we might even be able to go a little higher up into like this area up here, and that would give us a 1 to 3.79, almost a 1 to 4. And that's perfect. That's really good. If you can keep it at 1 to 3 or better, geez, that's really good. Okay, so let's go with this. I do like it. I kind of wish I had gotten in earlier. I wish I had seen this last night. It's my bad for not capturing that because that could have been really, really nice. Like I said, my bad for not sending that out. But I do think there's an even better opportunity coming. My guess is a lot of people put their stop losses just below this pivot right here. And little do they know that that's just below that is where the banks probably have their eyes set, is right here. So if we break beneath this low, I'd love to buy in this area right here. I think we've pretty much got that cornered. So that's a good buying zone. We'll see if we can get it. I definitely think it's possible this market comes down again and then goes up. Um, Question somebody might ask before I post this is, why don't you just buy right now? And the reason why I don't buy right now, a couple of reasons, is because there are lots of supply blocks up here. There's lots of supply. still in this area. We're actually not currently breaking new highs yet. We're still currently making lower highs at the moment. So I think there is a good chance that this Aussie CAD comes down yet again before it goes up. So I'm cautious of that concept. This technicals, lower lows and lower highs still. Um, and there was one other reason I was going to say, sorry guys, I'm trying to remember the other reason why I was going to say we don't want to buy yet. Oh yeah, the other reason is because we don't get the RR ratio necessary to be massively successful. Okay, so I'm going to go ahead and start posting this while I share my thoughts on this. So basically, our job is to be aware of what the banks are doing and get the very best RR ratio possible. If we don't get really good RR ratios on a lot of our trades, it's really hard to maintain profitability. Because let me put it like this. How many traders do you know? Um, I mean, you've probably been this trader before. I definitely was this trader before, where you have um lots of winning trades. You could even win 90% of your trades, but you still lose money. So how is that possible? Like how could you win 90% of your trades but still lose money? And the reason why that's possible is because that's not the only variable that makes you profitable, right? The other variables include your average win to average loss ratio. So a lot of people, when I talk to people, um, when I encounter people who aren't members of our group, they ask me a lot like, "Hey, what's your win rate? How often do you win trades?" And I think that I think that can be a um like a good question. I think everybody should know what their win rate is, and that is an important variable to your profitability. But I feel like as retail traders, the more important question to ask is what's your average win to average loss, right? And I feel like the average win to average loss is a detail that shows your discipline, right? So if you can hang on to a trade longer, if you can hold out and get really good RR ratios on your trades, and if you're patient enough for trades to come to you rather than you going to the trade, um, that shows a high level of discipline in the market. And I do think that that is um, a better indication of how you're actually doing. Because I can't tell you how many times when I used to trade in the beginning, like 12 years ago, when I was a brand new trader, I had some scalping strategies that I would trade, and I'd make money, 9 out of 10 days. I'd be on a 9 day winning streak, and then on the 10th day, the market would do something totally different from my strategy, and I would end up losing everything I'd made in the previous 9 days, um, because my stop loss was so big or my risk management was terrible. I was adding to losing trades, that kind of thing. And that's how you can blow an account after such, you could even be winning. You could be on a win streak. How many of you guys have ever looked at robots, like different Forex robots? And that you find out later that that bot blew up. Forex robots blow up all the time. I think people are getting better at them, but they still blow up. And they blow up because a lot of robots, in fact, 95% of robots use some form of martingale. And it's one of the only ways they can make it work, I guess. I think that's the way they look at it. And so I've made a few bots of my own, and yes, oh yeah, I guess I use martingale. Yeah, it's like one of the only ways. But a lot of times they just are super risky because they require huge drawdowns to recover bad trades and things like that. And I feel like us being manual traders, being able to identify the market and where liquidity zones are, doing things that a bot can't figure out, actually gives us an edge. There's some things that bots are really good at, like following instructions and being disciplined. but sometimes that's also a problem, right? So we have a little bit of an advantage over bots, and bots have an advantage over us. But yeah, you definitely can grow into that though. Okay, I'm just double checking my numbers. 0.88249 is my entry. Taking profits at 0.89299. And we're going to stop out if it goes below 0.87972. Okay, this looks good to me. All right, let's take that trade. So give this one some time. I like our entry. I do. I think it's good. I debated, I think there's some good entries down in here too that might be nice. There's an entry right in here that could be good, but I just don't think that aligns with what we're doing. Um, I think the banks have a greater need to send this up sooner than that based off of the COT report. And so I think this is the prime area of demand right here. I could be wrong, but I think this is it right here. So that's what I want. This market to come down, hit that demand, and then just boom, from there off to the races. All right, guys. So tonight we might look for a couple more trades in those webinars. We'll have a good discussion on overnight trading sentiment and obviously the COT report. That'll be really good. I think right now it's just hold your weekly trades and make sure you're going through the. Oh, does it say Aussie yen? My bad. Let me fix it. I'll fix it right now. Thank you for thank you for telling me that. One second, let me fix this. Okay, that should be good now. Thanks for capturing that. But yeah, tonight we'll look at the COT report, we'll look at sentiment, and I think that'll be good. So, all right, guys, we'll have a fantastic rest of your day, and we'll see you guys in the next webinar. Thanks for coming.